Hello, everybody, and welcome back to the world of investing. In this episode, I'm going to be discussing the basics of investing, where I'll simply be defining investing terms and then further speak on them. So, to begin, I'm going to start by answering this simple question. What is investing? Well, investing means to allocate an asset, in this case money, with the goal of making profit over a certain period of time. When investing, you are taking a risk by sacrificing your money with hopes of course, making more money. The income that is generated or lost in an investment is identified as a return. In investing, risk and return are associated with one another. So, low risk generally means low expected returns, while high risk is usually accompanied by higher returns. And of course, this isn't guaranteed, but it's usually what occurs. So the amount you make from investing is called total return, and there are many factors that impact your total return. Some of these factors are appreciation or depreciation and taxes. So capital appreciation is an increase in the value of an asset over time. So, for example, if you invest in the stock market, then appreciation occurs, then your stock, in turn, is worth more money because over time it increased in value. And depreciation is basically the opposite, so it's a decrease in the value of an asset over time. And the next factor is taxes. I'm guessing we all know what taxes are, but I guess to clarify, it's part of the income you make is given to the government. So in investing, part of the money you make from your investments is given to the government. So every time you invest in something, you have to plan that part of this profit is going to go to the government. And in certain investments, you are not taxed, but it's common that you are taxed. So in this episode, I will focus primarily on investments called ownership investments. And so ownership investments basically are those investments where you own an interest in some company or other asset that has the ability to generate revenue and profits. And I guess examples of other assets would be stock, real estate, or a small business. Ownership investments involve some risk, of course, and I would suggest diversifying your portfolio. And let me just quickly clarify what diversifying your portfolio means. It basically means that you're not investing all of your money that you want to invest in one particular asset. So you spread the money that you invest in different assets that you have knowledge of in order to best set you up for success. And so if you diversify your portfolio and take some risk in these ownership investments, then this truly is the key to building wealth long term. When looking at the very wealthy people of the world, many have gained wealth through investments, specifically ownership investments. When looking at, I guess, Elon Musk, Warren Buffett, I'm just putting out some names of very rich people who have invested and they've truly made a lot of money. Just to highlight the significance of investing and the amount of money you can make from doing so. So just to reiterate, if profit is sought and risks are taken, as well as diversifying your portfolio, ownership investments truly are key for the long term. In the future, I'll discuss different kind of investments other than ownership investments, such as, I guess for an example, bonds, um, which are investments where money is lended. And I'll get into this later in future episodes, but I just wanted to highlight that I will be discussing other investment options and other types of investments. All right, so back to ownership investments. I'd say the primary ownership investments, as I mentioned previously, are stocks. That's one. Real estate, two. And for three is small business. So these three ownership investments, they truly provide you with the best chance of generating a good profit. To start off with stocks. Okay, what is a stock? To put in the simplest terms, a stock is a share of ownership in the company. So when investing through the stock market, you essentially are buying shares of a company's stock and a percentage of ownership in their company. When a company experiences growth and makes profit, if you invest in that company, then you reap the rewards. On the other side of things, of course, if the company doesn't do so well, then you're left losing money. But this is where risk plays in. And also, this is important, developing knowledge before you invest. If you develop knowledge, then obviously you'll best set yourself up for success. If you, for example, I guess, blindly invest, then blindly invest in a company that you know nothing about, then you're taking a big risk, and it may not even be worth the risk if this company is not known for booming or thriving. Alright, so let's get back to things. So how do you purchase stock? In order to purchase stock from a company, this company has to publicly trade stock on the stock market, in the stock market. So I guess companies who are private, if you're an ordinary folk, you can't just buy stock from them because they decide who's issued stock, and commonly it's their employees or people associated with the company. So to buy shares, you can purchase them through a brokerage firm. Also, some companies sell shares directly to the investor, where the investor will make a direct purchase. There are other ways to buy stock, of course, but I guess these are the most common ways. Alright, for the next ownership investment, real estate. Real estate is a property of land or building. By investing in real estate, you purchase land or building with hopes of, I guess, renting it off and making a profit in the end. Also, you can invest by flipping real estate, and this means purchasing a home that is, I guess, undervalued and selling it for profit after you fix it up, make it look much better than it previously did. The real estate investment requires more time and dedication than other ownership investments, I guess, because when owning and managing real estate as a landlord, you need to satisfy customers and sell to tenants, manage costs, deal with competition in the real estate market, and etc. But it is a proven way to generate profit, and it's very efficient. But once again, I guess I'll pitch you a scenario. If you own real estate and you're renting it off, and one of your tenants calls late at night, wakes you up, says, for example, maybe their pipe's broken, this is an example of something that you have to deal with and take time and dedicate yourself to your real estate. And in the end, you'll hopefully be making a good profit. Lastly comes investing in small business. So, what is a small business? It's pretty simple. So, it's basically a business where there are fewer employees and less annual revenue than a regular sized business or corporation. For example, Amazon is not a small business. It's one of the largest, very, very large corporation. And I guess you can compare this to, I guess, a bakery in your hometown. There clearly are less employees, and the bakery obviously makes less annual revenue than larger corporation. All right, so when you invest in a small business, you're essentially running the business. When you establish a small business and run it, or buy an existing small business, it means that you're devoting your full time to it, so it becomes your number one work priority. It's your main job, in other words. And in comparison to the other ownership investments, for example, when investing in stocks, you typically do this part-time, so it's impossible to compete with professionals who deal with investing 24/7, and you're basically competing with these guys who know what they're doing, and not to say that you don't know what you're doing, but they just have a better chance of reaping the rewards. When you run a small business, you are the boss, and regarding investing in your own company, there really is nobody to compete with. You control everything as the boss. Besides running a small business, another way to generate money from small businesses is by investing in them. You don't have to necessarily run a small business or buy an investing business. You can just partly own a small business. Also, when it comes to starting a small business, there's just so much diversity in different types of small businesses. It's pretty crazy how on one end there could be, like I mentioned, a bakery, and on the other end there can be, I guess, a bike shop. That's another example. There's just so many different small businesses to choose from, and so many thriving small businesses, and it shows that it really doesn't matter what type of business you choose. It matters if you invest in it, you run it, you do a good job running it, and you make a profit in the end. Alright, so to reiterate, the three primary ownership investments: stock, real estate, and small business. These are the key to building long-term wealth when risks are taken and you diversify your portfolio. Alright, this is going to conclude this episode. I hope you enjoyed my discussion, and I hope you listen to my future episodes. Thank you.